Hello traders, this is Michael coming to you from GammaEdge on Thursday, June 5th with our 5-minute pre-market morning prep. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently starting with our market trend model that's based on the tick index. You can research that at your favorite investing website. The quick TLDR takeaway of this is an overall look of buying versus selling in the market. This bolded white line is our intraday instantaneous CT. If it is from lower left to upper right, this is indicating that more buyers are in the overall market than sellers. And then our colored ribbon down here is our longer term look back period for longer term positioning in the market. Again, if the red is above cyan and with a positive slope, that is indicating that there are more buyers versus sellers in the overall market. Breadth indicator, new highs versus new lows. Green line obviously above the red line, indicating more stocks are being bought than sold. Our filtered cumulative tick, this cyan line, this is larger institutional orders, plus 1,000, minus 1,000. Block orders indicating we were above zero yesterday, so institutions were involved. We did see a slight downturn in the instantaneous CT towards the end of the day, indicating we might have seen a little bit of weakness in selling into the close, but the overall cumulative tick was above zero and rising, indicating more buying versus selling. Moving on to our SPXA, this is our cruise ship, longer term, less turned over expiry contracts as denoted over here. Again, call dominated above and below spot price, completely green net delta across the board in the structure and sentiment. So that is obviously extremely bullish from that aspect of our SPXA 40,000 foot view, cruise ship view. Moving on to the SPXP, these are shorter duration contracts that turn over daily, weekly. We are call dominated above and below spot price, again indicating that market speculators speculators are in control of the overall structure. We do have our transitions labeled here, GEX and DEX transition. We did close within the DEX transition yesterday, but above the GEX transition. So again, still bullish across the board as we are call dominated above and below spot price. You'll denote these gradients here: 6,000, 60.50, and 6,100 to the upside. Extreme out of the money call speculation continues, so more than likely price appreciation to the upside will continue, and any pullback will be dampened volatility. Pullback down towards these levels will be an opportunity to get involved in the overall market. Moving on to the SPX, SPX GEX ratio. Again, indicating a slight drop in sentiment here. This is shorter durated call gamma leaving the overall complex, so just slight weakness. We're above that one, which indicates that call speculators are still in control. So just looking at short duration possible weakness, but again, just an overall pullback within a strong uptrend in bullish sentiment and structure in the overall market. Moving on to the SPXP delta balance, again separating each individual plane. We denote the right-hand plane, which is that out-of-the-money call speculation dropping slightly below zero, so slight weakness in that call speculation to the upside may limit overall price appreciation. Delta balance and the left-hand plane staying towards one, so again indicating that strong support below us via in-the-money calls. Delta balance slightly dropping, so again short duration weakness may be entering the overall market, so we may be entering a place where we see short pullback in spot price. SPXP 0 DTE, again, expiry up here, a couple circles denoted here. Net GEX is very low for today, so this easily could slip negative depending on what the intraday vol-m command is telling us. So again, that could be indicating that we have some short-term weakness. GEX and DEX transition, very unambiguous here with our levels. So again, staying above these transition levels will lean a little bit more bullish for a move toward the upside. To the down, being below these levels, we'd anticipate a little bit more weakness down towards 59.50. If we get below 59.50, this may be an opportunity to short for a little bit more weakness into this in-the-money call-dominated environment. Again, probably not a large move down. We see that 5,900 level to the downside. That would be an area that most likely we would see some pausing. This first step would be the 59.50, and then 59.25 and 5,900 to the downside. Again, staying above transition, we'd look for a move back up towards that 6,000 level. Again, noise floor we've talked about, call dominated above and below spot price. Low OI heading in today, so we'll be at the mercy of the 0 DTE speculators. So vol command will be an integral tool to watch today for positioning via the options market. Net stat command, highest sensitivity strikes. We've already laid that out. We have in the money calls at 5,900 that are the largest integral here, and in the money puts at 60 above us, obviously significant level above us. So again, this is what we call a locked horns look. So we'll just most likely be transitioning, or sorry, chopping between those transition levels with not a lot of price movement unless we see a significant move in the vol command, as well as structure coming in for the upside or the downside. So we'll continue to watch that intraday. That's all I have for this morning. A quick 5-minute overview of our sentiment, structure, and trend. Last summary takeaway is we have bullish structure across SPXA, SPXP. We have very well-defined transition levels that if we're above, we'll be bullish. If we're below, we might see a little bit more pullback and weakness. Couple opportunities there for trades. Again, low OI for today, so we'll be at the mercy of the 0DT positioning. That's all I have for today. Thanks, everybody, and we'll see you later.